CME Group, a financial exchange based in Chicago, is putting part of the historic Board of Trade building up for sale. Matt Garrison with South Street Capital. He's an expert in commercial real estate. He's here with us to talk about this. Welcome to the show, Matt.
Thanks for having me.
Good to have you. So, any idea about the selling price of the Chicago Board of Trade building in today's commercial real estate market?
Well, no one knows for sure, but there's talk of around $150 a square foot number, which is a pretty healthy number for an 80-year-old office building like that. That would amount to a little bit north of $200 million.
$150 a square foot, that does seem a little bit low. I mean, any idea on how it compares to new office buildings?
New construction Class A office buildings can sell for 2 to 3 times that much. But for an 80-year-old building with high expenses that's not as efficient, it's a really good price.
So is this any sign of any kind of trend that's going on in commercial real estate?
Commercial real estate's back. Like Mark Twain said, reports of the market's demise were greatly exaggerated. There's no shortage of capital and institutional capital looking for yield and looking for deals. And Chicago is starting to be the beneficiary of an influx of capital from more frothy markets on the East and West Coast.
Well, how do you think that commercial real estate kind of saw this soft landing? Because a few years ago, people were really questioning that commercial real estate was in a huge bubble and that there were tons of loans that were going to be maturing between now and 2015. And the concern was that those loans would not be able to be refinanced. And is that just not a concern today at all?
Well, I think it's still a concern if you have a vintage 2006 CMBS loan, you know, with high leverage and a negative debt service coverage ratio. It's certainly a concern for that person. But for the market as a whole, especially in a really core area like the Chicago Central Business District, especially for a kind of iconic asset like the CBOT building, I don't think it's much of a concern.
But what about the demand? I mean, job growth has been pretty lackluster here for the past 2 years. You know, who is really taking over the spaces like this, and is there really the job growth to back that up?
Well, this particular building, I think, is 83 to 88% occupied, and it's been a beneficiary of a surge in Chicago of electronic trading. And as it moved from the floor to electronic, all these proprietary trading firms have jumped and filled up the space, and the building's wired to service those firms, so it has a competitive advantage.
Is this also a sign that companies are thinking twice about owning a building versus renting?
Well, I think that certainly a seller like this wants to be in the financial derivatives business, not the real estate business, and this is kind of a legacy asset that they have. And you know, they're traders, and right now is probably feeling like a pretty good time to sell for the short to intermediate term.
What's your prediction then on commercial real estate here for the next maybe 5 years? Do you think it's going to be pretty stable?
I think it's going to be pretty stable if certain vintage 2006, 2007 assets are met with distress. They'll be met with demand on the other end, and they'll get bid up to to fair market value for today, which is slightly below that level, but it's really underpinned by a lot of demand, especially for core assets.
Okay, we'll see how it plays out. Thanks very much, Matt Garrison.
Thanks for having me.
He's with South Street Capital, also an expert on commercial real estate.